والآن سيمينار شركة هوت فوركس مع مسز أندريا.
So, hello everyone. I'm Andrea Bihidi. I'm a market analyst in HFM. So I've been in the industry for nearly 10 years now, and with HFM nearly 6. So I decided today to present something different because we have discussed a lot about fundamentals in the panels the last 2 days. I decided to go into more technical stuff, and I will present you today some short-term strategies. So how many of you are already traders? Okay, I can see some hands, that's good. So these strategies, as I mentioned in my slides, is short-term strategy, so we're gonna see some scalping pretty much strategies. But before I start, and over here I'm stating the reason why I decided to present strategies. So the very first lesson that I got from my experience in this sector, but in general, is that if you fail to plan, you are planning to fail, like Benjamin Franklin said. So in everything in life, not only trading, even if you want to open a shop, or, I don't know, any online business, or anything without a plan, you're possibly gonna lose, right? So plan, and risk management. Planning is a kind of a risk management because it limits your potential losses, right? So, and one part of a planning, of a correct business planning, trading planning, risk management planning is having a strategy. Either your own or a combination of strategies that you have thought that, okay, yes, it looks nice, I've tested it, it works for me. It might not be, you don't need to blindly follow strategies. Test them, amend them based on your own psychology, personality, because of the different assets that you're trading. None of us is trading the same stuff, none of us is trading the same time frame, none of us is having the same thinking, so you need to adjust your strategy, your plan, based on your personality and your free time, right? Some they might have a whole day to spend watching the charts, some this might be their second job, or they do it as a hobby. So, 00 strategies, moving average ripon entry strategy, ripon using stochastic as an exit strategy, and if we have the time, we might see also Heiken Ashi. So I'm trying to be short and to stick to the schedule. So the very first one that I chose is 00 strategies. So this strategy has been developed by Kathleen Lee, and is one of the most famous successful trader in the world. She managed to enter Wall Street at the age of 18 years old. So she created a lot of strategies, and the very first that I decided to show belongs to her. So pretty much, she studied, before creating this strategy, the market structure, the market dynamics. Pretty much he studied the psychology of all the market participants, banks, dealers, institutional players, retail traders. So by saying market dynamics, I'm referring to how the people in the industry, in the market, the people that are actually investing, how they are thinking. So by studying their behavior, she realized, she figured out that there are some levels at which we can see the market reacting a bit more than others. And an example of that is the round numbers, the 00 numbers. I have put on some examples. By saying 00 numbers, we're referring to round numbers that, like 111 for euro dollar, 112, 113, 120, which is a triple round number, so it's even more important, because on those areas we tend to see these levels reacting as really strong support or resistance levels, depends on which side of the market we are. So this strategy attempts to put traders on the same side as markets by positioning traders for a quick contra-trend move at the 00. So this is a strategy that can be applied in a 10 or even 15 minutes charts. So I want to clarify that you need to test it. I'm not saying that you can apply it in every single asset. I don't know what you're trading, but you need to test it or review it in a demo account or something before you actually decide to apply it. So over here, I have the rules for a long position. So there are 5 simple steps. As I said, it looks in the history of the results that Ms. Kathy Lien gave us is that it's a good strategy for a 10 and 15 minutes chart. So the only requirement is to apply on your charts the 20-period simple moving average. You need to check whether the price action is above or below the moving average. The second condition is that it's moving towards a round number, a 00 number. So if your chart, so in this, these are the strategy rules for a long position. If your price action is below the 20-period moving average, and also is moving towards a round number, that could trigger a long position 10 pips below the 00 with stop loss, 20 pips away, 10 pips is the entry, 20 pips below the entry is the stop loss, and there is also the 2.5 rule. What I mean by the 2.5 rule? That once your profit is double of your risk, you need to close either the whole position or the half of it in order to close some gains, and you can keep the remaining 50% of the position using a trailing stop. So you're gonna move your stop loss higher, lock in some profits, and move on for the remaining 50% of the position. This is an example. So requirements are met, as you can see, right? So this is a long position. I have an example for a short position as well. So initially, the asset was, this is a 15-minute chart, Aussie, by the way. So my Aussie over here managed to retest several times the 20-period moving average over there. So that suggested that momentum is changing after this long-term decline. So that triggered an entry position with stop loss 10 pips below, or if you're not sure, make sure that your stop loss is below the latest bottom. First profit, double the distance, so at 40 pips higher. Lock in some profits on the first target, and keep the remaining position open, in which you can apply the triple profit, or that's solely up to you. It depends on the risk and reward ratio that you wish. So I'm going to show a short position example as well, if we have time. Yes, we do. So I'm going to skip this slide. It's the exact opposite things. So the price should be above the 20-period moving average, moving towards a round number. The same things apply though. 10 pips above the 00 this time, 20 pips above the entry price is the stop loss, and the 2.5 rule. So, as you can see, it broke my 00, okay? And it reverted, breaking below it. Even if you missed entering a short position on the 10 pips above the 00, it doesn't mean that you have failed, okay? You can see how big that candle was. So it seems that is a strong trend, so there is still time to enter short, okay? So even if you missed the second step to enter 10 pips above the 00, it's just fine, as long as you apply all the rest of the steps. So keeping a protective stop loss 20 pips above your entry, and your target will be reached as soon as you double your profits. So, the second strategy, is a scalping strategy. So it can be applied in a 3 minutes time frame. I have tested it also in a 5 minute time frame, but depends on the asset. So test, 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 right? And pretty much it's a combination of 3 moving averages, 5, 8, and 13 simple moving average, which will help you, first of all, identify a trend, how strong it is, whether it's reaching into a potential reversal, and also it can help you both or sold short on counter swings. So as long as the price is moving in a line with your moving averages, it seems that it just shows you that will stay on the same direction. It's still on, it's still strong, it will stay on the same path. But if you see any penetration of the price into the 13 moving average, that is an alert that you might have a reversal. So I have another 4 minutes to show at least this example. So, the price action was below all my moving averages. But over here, I had a penetration. Actually, the price broken my 13 moving average is the blue line, okay? Is the blue line. Triggering an entry, a long entry. Something that warned me before that I might see a reversal was the wider, so you can see that the 3 moving averages are getting wider and wider and wider. So that's one signal that, you know what, the decline might stop. We might see a rebound. So that was, once the price moved above the 13 moving average, that was a possible entry point. What if I missed it? According to the rebound strategy, possible entries could be every single time that the price is rebounding, retesting the 13 simple moving average, and rebounds. So another possible entry was here, another possible entry was here, here. Once the candle closes, though, once you actually see it closing away from the 13 moving average. That's the long entry. The short entry is the exact vice versa. So your price action is below all moving averages, okay? And the entry, the very first possible entry is once it closed below, it's on the very, very first candle, which as you can see is really strong and closed far away from all the moving averages. So that could be a possible entry. Or every single time that it retests the 13 simple moving average. So you can add on your existing position, okay? So another possible entry was that one. I cannot really point, but it was that retest, that it was retested twice. So what's the, I have another 2 minutes, right? Okay, so I'm finishing. So just to show how the trader knows when to take profit or cut losses, right? We've seen rebound, but we haven't discussed about exit points. So one way that it could, this is one way just to help you identify your exit levels. You can use stochastic, 533, short-term stochastic, or 3 standard deviations Bollinger Band. In this example, I have stochastic. So as you can see, if I had taken that long entry, on the reversal of stochastic, bearish cross over there, breaking and moving below the 80 level, that's one possible exit. So you need to make sure that your stochastic has a bearish cross, okay, but close to the overbought territory, not down here, okay? So I have spotted several exit points. I have ignored these because it's already done. It's already, it shows consolidations, it shows stability, and it shows that it's reversing again. We're gonna extend a bit higher. The same stands for short positions. So exit could be considered when I have a bullish cross, either below 20 or really close to 20 territory, which is my oversold territory. Okay. So let me see the time. I had more examples. Obviously, you can find us in our booth downstairs if you want to discuss anything with me in regards to these strategies, or even if you want me to provide you some slides if you're interested in scalping strategies. So my time is up. I need to call it a day, but hopefully this was a helpful strategies for you guys if you are scalpers. And for any further info, you can find us downstairs, okay? Thank you very much. And sorry for making it a bit short. I was supposed to show a third one, so. Up. Thank you very much. Have a great day ahead. Thank you.
Thank you, Ms. Andrea from HFM.